Well, hello everybody, and welcome back to another edition of the Forex Market Preview. My name's Jason, and if this is the first time you're joining me, thank you so much for doing so. And if you're a returning Forex Market Previewer, yeah, that'll work. I appreciate you guys coming back again and again and again. Now, in this weekly video, what I do is attempt to break down some of the charts for you and give you guys some high probability trading opportunities into next week. Now, sometimes we are wildly successful at that, and sometimes we don't hit the mark. And when I say we, I mean me, because I'm the only one talking. Last week, I gave you guys one trade, and I said either I'm going to look like a hero next week or I'm going to look like a dummy. And it looks like this week I get the dummy award because this particular trade did not work out. Now, the trade that we were watching, guys, was on Canada yen, and I was looking at an advanced pattern here, right here, and I was looking for a completion around the 886, which was basically where the market had closed. So this was the pattern formation. The market had closed right here, and I was thinking to myself, well, this is likely to be a reversal point. And as you can see, the market gapped down ever so slightly and then ran, and we saw a nice press downward. It looked like everything was kind of moving in our direction. Then we get a spike back up into previous structure resistance. This gives us a third test. If we're looking at this thing, we're seeing the initial test here, then the retest, then the third test here, and I'm thinking, all right, well, maybe we got this. Market pulls back and then skyrockets, shoots up one more time, breaks previous structure. This was a false breakout, and it was just enough, based on our stop placement, to trigger our stops on this particular trade. It's kind of ugly the way this thing worked out, but hey, that's the way the cookie crumbles. And then it reversed on a dime and ran all the way back down to close around 95.56. Now, this is the thing here, because a lot of people will look at this and they will say, well, what did I do wrong? And they come up with all kinds of outlandish issues like, oh, my broker knew what my position was, or, guys were stop hunting me. And in reality, they were stop hunting you. This is what happens when you get a false breakout, although it's not always intentional. Sometimes stops just get triggered. It causes a press like this because there were a large number of stop orders resting just above these highs. And you get this press up, and then once all of those stop orders have been triggered, then the market has absolutely no support and it falls back down. So it's not always intentional that you get stop hunted, but it does occur, and it's legal, and there's nothing wrong with it. It's part of playing the game, so get used to it. There are going to be times when you take trades like these and they just don't work out for whatever reason. Now, the important thing is that you don't dwell on the fact that you had a losing trade or that you got, your stops got triggered. If it's happening again and again and again, then you potentially need to look at your trading plan and say, okay, what am I doing that's causing this? Do I need to move my stop placement? Am I just in the wrong place at the wrong time? But most likely, if it's occurring again and again and again, if it's repetitive, there's some issue with your stop placement, and we need to look at adjusting that. But in most cases, in situations like this, where the market spiked up just enough to stop us out, then it reverses on a dime. You can't avoid losses in this business; they're gonna happen. And so the important thing is that you recognize when it's a loss. You recognize that there was nothing I could do about this. There was no way around it. I had my stops in place. It just so happens that this particular time, I got burned. I took a rip. And then the market reversed, and potential chance that I would have had a winner here. We accept it, and then we move on, because there are more trades out there. There's more stuff that we need to be looking at, and we don't have time to sit around and dwell on the fact that this one particular trade didn't turn out the way we wanted it to. But so, again, did not call that one right, and I'm not afraid to come back and tell you guys I missed the mark on that one. In fact, the pattern was good. The market had held the resistance level. It seemed to me to be an excellent place to be looking for a shorting opportunity, and in this particular case, it rallied just high enough to stop us out. Now, before I go too deep into this, for some reason, when I updated to the latest edition of eSignal, they wiped out all of my previous, all of my previous lines and stuff on here. So I have nothing now, and it's kind of frustrating to me. But it's neither here nor there. When I was going through the markets on Friday after the close, One of the things I noticed is that it is very slim pickings here in terms of advanced pattern formations, which is what we all trade. When I'm looking around, I could go through these charts and I could show you guys, oh, well, look, the euro's trading at 32.75, and there's a really good chance that if Bernanke comes out this week and he starts talking about how he's not going to institute a lot of reduction in the quantitative easing or a lot of reduction in the bond buying, that could signal a rally in the euro, and that we could run all the way up to the highs here around 3400s. That is absolutely useless information. If you can't tell on this particular chart right now that we're trading at 32.75 and the next stop is 3400 if we go north, then you shouldn't be trading. Just flat out, you shouldn't be trading. You shouldn't be trading technicals anyway. Maybe you can trade fundamentals, I don't know, but you shouldn't be trading technicals. And I hate watching videos from so-called experts who come in and all they're doing is showing you support and resistance levels. Let's run over to the pound. Let's take a look at that. And we can look at that and say, oh yeah, 5300s. We could rally up to, the next high level is 5664. So if the market continues to rally here, expect to see, we could see, 5664. And then potentially on up into, look left, structure leaves clues, 5730s. I mean, what kind of a reject who trades currencies can't look at a chart and tell that those are where the resistance levels are? There needs to be something more, and that's what this video is designed to be about. Not only, we take some breaks out, where I teach you a little bit about structure, I do some training lessons in here, but in reality what I'm trying to do is find you guys high probability trading opportunities and show you exactly where the reversal should come in. Now that's a tall order to do sometimes, and this week especially, I'm running into some problems on these higher time frames trying to find some good pattern setups. Now, there is one setting up here on Euro New Zealand. Euro New Zealand on the 4-hour chart. I'm going to let you guys take a look at it because I want you guys to be able to pick it out. So I'm going to give you just a couple of seconds here. Where is the pattern and what is the pattern? As you guys continue to get better and better at this and you train your eye to recognize the pattern formations, what you're going to begin to see is the pattern is going to start being drawn out of the chart as you're looking at it. And you're going to recognize, hey, I think that looks like a cipher pattern. I think that looks like a Gartley pattern. And then you're going to start drawing those lines in there to make sure that the ratios all line up. And in this case, if I go ahead and just draw this in, some of you guys I know got this because you've been with me a long time. You're going to see a nice Gartley pattern here completing at a 786. And look at that. You see how I just drew it? And I automatically knew within, a few pips of where that 786 was going to come in at. That happens when you've been doing it long enough that those patterns just start to emerge. They just start to come out. If I draw in the Fibonacci extension at the 127, we're going to come in just a hair lower than that because we dipped a little bit on our 618 retracement here. But basically, guys, what we're looking for is we're looking at a potential buy right in here between 63.20s and 63.50s. Somewhere in this area, and I'm just going to color it green so you guys can know that's what we're talking about here. Okay? So here's the big if the market presses down into 63.50s, 63.55, 63.54, and comes somewhere between there and this 127 extension, 63.20s, this is going to be the buy zone. This is what Carney would call the potential reversal zone, or the PRZ. It's what you'll hear me refer to as the kill zone. It's the area where, all the grazing fire happens. And if there's going to be a reversal in here, this is where we want to pick our spot. Now, the market can actually press. If I do this, I'm going to draw another box in here. The market can actually press all the way down into this red zone, anywhere in this red zone. Okay? So the market can go down into anywhere in this red zone and still be a valid buy signal. But we're going to pick the point which is the highest probability reversal area, which is right at this 786 127 extension ratio confluence. Now, where do you put the buy? Do you put it at the 786? Do you put it to the 127 extension? Guys, really, we've got some rules for it. I teach the rules to my clients. It's not that big a deal in terms of how you choose to manage this trade. You just want to make sure that you're waiting at least until the market hits this 786, and you want to try and find your buy area in here in this kill zone. Now, if the market presses down even further, if we come on down in here, this market can press all the way down in here, maybe to the 1414, and then still rally back up, and it's still a valid pattern, as long as we don't violate the lows here at the left. If we get underneath these lows, well, now we got to restart rethinking our position. We've got rules for stop placement and all of that type of stuff as well. But basically, again, to recap, the green area is where we look for the potential buy, and then it can come anywhere into the red zone and still be a valid trade. So it gives us an idea of where our stops need to go and where we need to put our limit orders to buy in the event of a rally here. These Gartley patterns are very high probability, about 60 to 70% accurate. So you're getting about a 1-to-1 risk-reward profile to your first target on the Gartley pattern. So this is a fantastic pattern. Trade them all the time. Very, very good opportunity here. And other than that, guys, I'm not seeing anything that I mean, there's a lot of stuff that may set up into the week, which is, again, another reason for you to be a member of the syndicate if you're not, because we put out, oh, good grief, I don't even know what it is. Sometimes between 3 to 10 trades a day between Akil and I. Those are intraday trades, so on those 5-minute, 15-minute charts, hourly charts, we're sending you that stuff in real time using the desktop chat software that we've got. So there is going to be some stuff, no doubt, that we'll set up early this week, but that was really the only thing, as I was running through my charts here, that I was getting excited about. So enough said about that. Before you go, one more thing before I let you guys go. We are, at the very end of August, we're having the next Technical Trader Workshop. You're going to start, I'm sorry, it's the end of September. At the end of September, we're having the Technical Trader Workshop again. For those of you guys who have not attended that, this is your chance if you really, really like this stuff. If you've been messing around with it, you've been in the syndicate for a little while, and you're like, this is it, this is where it's at. I know that I can use this. They've been using this since the dawn of time, and I know that I can use this particular strategy to trade with. You're going to want to be at that Technical Trader Workshop because it's where we lay the foundation for all of the stuff that we do here, and it's absolutely free. It doesn't cost you a penny. All you got to do is show up ready to work. So be on the lookout for that. I'll probably start advertising for that at the either the end of August, early September, and we'll do about a month of prep for that. But it's going to be a big event. We've got several other people who are going to be advertising it for us, and we would expect somewhere around 5,000 to 6,000 people to register, and then we're going to get I would imagine 2,000 to 3,000 people a day to attend. So it's going to be a big event. It always is. So be on the lookout for that. If you have questions, comments, concerns, hey, leave me some feedback. Let me know. If you're watching this on YouTube, which many of you are, I know, I do try and go through those and answer some of those, the more pertinent questions there. So until next time, guys, good luck and good trading. I'll talk to you soon.